How much money would you make in dividends alone if you invested $10,000 into YMAX and held it for 10, 20, even 30 years? There's been a lot going on in the world of weekly dividends, but YMAX has been performing well, better than I even anticipated. YMAG has also been doing well, and these two funds, although overshadowed by the more popular fund Ulti, are still keeping up with the markets. We're going to take a quick look at the overall returns, what we've seen with YMAX and YMAG, and then we're going to throw YMAX into that dividend reinvestment calculator. I'm going to do my best to get an accurate calculation and see exactly how much money we'd be left with after a couple decades of holding this weekly paying dividend ETF. If you are a fan of passive income or weekly and monthly dividends, don't forget to like and subscribe. And now let's roll that intro. What we are looking at right off the bat is the price return metric for both YMAG and YMAX. And we can see that YMAG holds up significantly better in these tougher markets than YMAX. But YMAX yields more. We're also going to take a moment and we'll check which one has the better overall return on the last year. But I am going to be taking our data from just the last year alone for these two funds. And what's important with that is we've seen them drop in price value, which is anticipated as we've seen a little bit of a pullback early on in the year, and these funds don't bounce back like normal stocks or even growth ETFs. They take a lot longer to bounce back, which is one of the negatives of this kind of investment strategy. Now, I will say YMAX is the universal fund of option income ETFs. They hold a bunch of the YieldMax monthly payers, things like Misty, NVDY, any number of the other ones, SOS, Snowy, I can't even remember. There's so many, and a lot of them are grouped into YMAX. YMAG holds just the Magnificent Seven, and let's see if I can do this. Apple, Amazon, Tesla, Nvidia, Google, Microsoft. Did I already say? I already said Amazon. Did I say Amazon? I can't even remember. I'm probably missing one, but that's how they are different. And so YMAG does have less in diversification, but it's really core companies that people have a lot of faith in, a lot of backing in. And YMAX has a different amount. So it's interesting. The differences we've seen is we've seen YMAX have a higher yield. YMAG has had a pretty high yield, but a worse overall total return. But that may change soon, especially with how much YMAX is falling. So I'm comparing these funds in just a simple way. So we can see now, we'll go to total return. And it is very interesting. The market cap or AUM, because these are ETFs, are vastly different. YMAX is more than double YMAG at 1.07 billion. It is the second largest weekly paying dividend ETF. YMAG is sitting at just under 400 million, and it doesn't fluctuate a whole lot. Since this turn in the market over the last couple of weeks, I shouldn't say turn in the market's been green, but these funds have been down. We have seen interesting change. YMAX was at 32.64% on the year, and YMAG was at only 23.4%. But YMAG has now almost outpaced it. Actually, it has outpaced YMAX. It is up 30.89% compared to YMAX's 30.32%. Is this going to flip back? Only time will tell. But this video, we are specifically focusing in on YMAX for our calculation. So we'll look at the dividend history really quick, also utilizing Seeking Alpha, and then we're going to jump into that calculation. Another important thing to specify is since converting to weekly, I would say these funds have been performing similarly. I don't think there was a crazy strategy change with the conversion. They just started paying out weekly, but they haven't paid out weekly for a full year. We're almost there. It looks like this month will be one full year of paying out weekly, which is great news. But they're also sporadic. So if you came from a dividend stock investing background like I do myself, then you'd be worried about this. Like, why are the dividends all over the place? Well, these income ETFs do not have consistent dividends. They're not designed to. You can't really optimize that without capping the yield in a number of different ways. So they just pay out what you get. And that's why it's different, because option premiums change, volatility in the market changes, and that has a direct impact on how much you're going to get paid out. So this chart looks scary because we've seen YMAX fall from 2160 to 1266, but it's not factoring in those dividends. Now, long term, is that something that we can utilize? Is it going to continue to shrink? Only time will tell. That's why we're doing a lot of speculation with this video with our investing 10K. We look at the dividend scorecard. It gives it an A+ on dividend yield, trailing 12 months, and an A+ on dividend growth. But we have also seen a near 66% dividend yield, which is absolutely insane. And that, of course, is how you're counteracting the overall drop in the price of the NAV. So annual payouts are $8.34 per share. It's $12.68, but that might be a little bit skewed because this price continues to fall. So now we're going to use the tip ranks calculator and let's see how much money we can make from YMAX. I want to start this off by saying this is an estimate. It's guesswork. It really is. I've taken numbers. I'll tell you exactly how I got this number, but it's an estimate on what it can do. And we have no idea what the underlying market is going to do. If it does well, it could outperform this. If it does worse, it could underperform this. And who knows when it comes to the overall NAV, if YMAX will even be a viable option 5 to 10 years down the line. So once we get past like 5 years, take everything with a grain of salt and let me know what you think. I've plugged all of our numbers in. We have 789 shares at about $10,005. Now, our expected dividend yield is 38.99%. Their last couple of dividends ranged in like the 50 to 60% range, but I also took out the price decline of over 26% to factor that into the yield. So this is kind of like a total return because we are expecting some NAV decline, and hopefully that dividend growth would keep up with the NAV decline, but it's hard. It's hard to do, and I would like these to be more stable. Let me just say, in an ideal world, these would be significantly more stable and you could buy them and hold them, but it's not the YieldMax formula. They like to pay out the most in yield you can get. We're paying out bi-monthly. It's really a weekly payer, but TipRanks doesn't have that as an option. I'm not adding anything to it. We're not getting taxed on it. Let's say it's $10,000 invested in a Roth IRA or a different tax-exempt account, and we are going to have drip turned on because we're dripping for the long term. Let's see how we do. So we can see first calculation, our 10K earns us $3,900 in just dividends. So if you're using this in a non-tax exempt account, you're going to pay a lot in dividends. It's a phenomenal amount, and our yield on cost is about 39%, which is very, very solid. We can kick this up to 5 years, and you can see why it's hard to imagine. Our 10K would 7x in 5 years. We're looking at a $69,191 balance, all of that coming from dividends because we've made almost 60K in dividends during this time. And this is where things start to get absolutely crazy because now moving forward, our annual dividend income on that 70K is $26,500. And it's only going to continue to compound from here. To be safe, maybe I should pull another 20% out for losses. I don't know. It all depends on your opinion on these YieldMax ETFs. Now, after 10 years, this is why it's so nuts with this compounding factoring in. After 10 years, our $10,000 investment would supposedly be worth $480,000. And this is what ropes a lot of people into these YieldMax ETFs. And I can say this is just not going to happen. It just isn't, especially at the rate in which the NAV has been eroding. I know over the last year, it hasn't been as bad, but I don't think you can keep this up. I will say that. I don't think you can keep this up. And after that 10 years, you're making $183,000 in dividends. So we can keep picking this up and go to 20 years. And now we're at 22 million after 20 years. And now I want to specify this is all through the power of compounding because we have no price decline. We're just making an absolute insane amount of money and we're reinvesting all of that, which is great. If you can reinvest your dividends and not have to live off them yet, that's amazing. It's what I do personally, not financial advice. I'll specify that again. But wow, these funds are kicking out high yields and the price return has held up decently, only down 26%. But another problem is we can't factor in with this calculation a price drop of 26% every single year. That's why I just took it out of the dividend yield, but the numbers aren't completely accurate. So we'll do 30 years, but it's just going to be some crazy number. Yeah, we're looking at $1 billion. So your 10K supposedly would become $1 billion. And while I do think that is amazing, is it realistically going to happen? Probably not. But real quick, we'll do one more calculation and see what you would have made with 10K invested into YieldMax in just the last year. YMAX, not just YieldMax, but 10K invested into YMAX would have gotten you a pretty great return, I will say, even though at one point it was in the red. And that's the thing, you can swing these quite nicely. If you play it well and you're able to and you have belief in the long-term market and the long-term underlying funds, it's not awful. It's tricky to do. Of course, it's trying to time the market, but people have done it and made some good money on it. So YMAX, if we had invested $10,000 September 12 of 2024, right now we would be sitting at $12,869. There's always, why is there, never mind. This is amazing. We would have gotten paid $8.67. That's all reinvested. Of course, this is not paid out directly. With dividends not being reinvested, you actually would do a little bit worse, about a 6% difference. An annualized gain of 28.77%. Absolutely amazing. So that's the thing. We've seen a really good year for YMAX, for YMAG as well. If you believe it will continue to have years like this, there you go. If the NAV decline over time worries you, if you're worried about just getting all of your returns back in dividends and not seeing that NAV have any stability, that's another factor that you should definitely think about. But I hope you enjoyed this video. I hope you found it informational, educational, and at least a little entertaining. Thank you so much for watching. If you liked this video, again, don't forget to like and subscribe and check these out on your screen right now, because I bet you're going to enjoy them as well. Thank you guys so much. Don't forget to spread some love today.